Everyone's now in. Thank you very much, everybody, for joining. Property Wednesday, not Property Thursday, Property Wednesday. And welcome, Grant, to the show. And it is a show. And we're going to be talking about all things IP Global. I've got a great affinity with IP Global, having worked with them some time back. I'm really looking forward to this because you've got some great stories to tell. You've got some great projects there, Grant. So I'm looking forward to it. Welcome.
Great, thanks, Chris. Yeah, it's good to see you again. And I recall we started off in January with a webinar together, and we're ending in December with a webinar together. So that's very pleasant.
Please, let's pretend there's still weeks and weeks to go this year, so people can get sales in.
Absolutely, yeah, we're still very busy.
Not closing down yet.
Yeah, for sure.
Absolutely right.
So let me begin. Thanks, Chris, for the introduction. So yeah, today I'm going to cover London and Birmingham, so capital and second city in the UK. Just a bit of background to myself. I've been in the business since 2006, so pretty much since the beginning, here in Hong Kong. And hopefully this presentation will just give you a good sense of why we're investing in these two key cities in the UK. I know there'll be a chance for questions towards the end, and obviously, Chris, feel free to stop me at any point, and happy to take any questions from your good self as we go through.
Thank you.
Okay, so let's go into the first slide. So again, for those of you not familiar with us, IP Global, we are a research-driven end-to-end property investment company. We actually co-invest with our clients. So in effect, we underwrite our deals, we put capital down. It's never possible to take all the risk out, but we try to downsize as much of the risk as we can when we bring our opportunities in key city centres globally. And when a client does invest, we look to try to simplify the process. So introduction to a lawyer, help find the mortgage, help find tenants, and one day we can even help sell the investment too for the client. So if we go into the next slide, here's a little bit of background to our global reach. So Hong Kong's the head office here. We've also got a big presence in China, of course, in the Middle East where Chris is, South Africa, and also Europe. They are our main hubs. So in terms of what we've done, we've transacted on over $3 billion of property since we set up. We've completed on 5,500 properties. So we've gone all the way through the investment journey, from the lawyers to the mortgaging to the rental side. And that's across 18 countries. So we are not just specific to one or two countries. We have a lot of global experience, and experience is a key word. As I say, we have in-depth knowledge of many markets that we've invested in over the years.
I mean, I can concur with that because obviously I was at IPG, and in that time that I was there, 10 years, Australia, America, Chicago and Miami, Kuala Lumpur, Berlin, obviously, Portugal. You've got a great reach, and I think that what makes IP Global set aside from the other companies. Everybody else is really concentrated in the UK, so I think that's a really good thing.
Yeah, no, you're right, Chris. I mean, and also just on that, so when you mentioned the US, we've done about $150 million of investment in the US. It's not just the old project. Similar for Germany, 150 odd million. And Malaysia won't be far short of that in the earlier days of the business. So we've worked those markets very strongly, not just for one or two projects. Yeah.
Yeah. And you mentioned it as well. I'm sorry to cut across you, but okay. One of the key things in the due diligence and the research that you do is making sure we've got mortgage finance, whether it be in Chicago, Kuala Lumpur, or Berlin. That is key to it. You really have to work hard to make sure that we've got all those things tied up.
Yeah, absolutely, Chris. You're right. I mean, the fact is, it's one side getting the project, but the other side is you need to get the process set up. So you need to have the lawyers and mortgage options and the rentability all covered before you go to market, go to launch. And it's one of the reasons why people don't do it themselves, because they might find a property, but then they get stuck on all the other parts of the investment journey.
Agreed.
So as I say, London and Birmingham, that's what we're going to cover. London is starting to turn the corner now. It's been the slowest market to recover in the UK sort of post the pandemic, and Birmingham, where I was sort of 18 months ago, just before the pandemic, I was amazed how that city is transforming, growing, evolving. So different to my image of Birmingham growing up in the UK as a dour sort of city. It couldn't be further from that now. So very exciting investment opportunity and lots of potential for good growth, I believe. So we'll get into the detail now. So we're going to just talking a little bit about London and Birmingham, and then I'm going to share some insight into the actual projects that we have there. So London ranked #1 by PwC for real estate prospects in 2022. So over the next 12 months, there's a clear, strong consensus that London will offer great investment opportunity. And I just wanted to put this slide up because I think, you know, it does show you that even though it's only been since mid-July that the UK has opened up, and, you know, London has been hardest hit by unemployment regionally. The fact is, aside from COVID and Brexit and everything else, you know, London's there in terms of top of the Europe's most active markets in terms of capital deployment into the city, 16 billion versus the next closest city of Frankfurt, 6 billion and 5 billion respectively for Berlin. And all those other cities aside from London are great cities to invest in, but it really does show the strength, the belief, the confidence in London from institutions, individuals in London, and that sort of certainly bodes extremely well for the year ahead. And as I say, since July, we've started to see the first green shoots of recovery in the property market, which is great because, of course, you always want to try to get in at the beginning of the cycle. So let's go into the next slide. And of course, you know, what are we interested in? Well, we're interested in the supply side. You know, supply is a key part of why it makes sense to perhaps invest in certain locations. Yeah, the numbers for London are quite staggering. We always talk about the UK as an undersupplied market. We talk about the fact that planning, permission, you know, rules and regulations are quite archaic. But of course, Brexit, where lots of developers put off building, you know, COVID, where sort of town planners have not been meeting or been furloughed, etc. It means even less stock's been coming into the market. So where we see in London, the city, you know, 9 million people plus, there's an undersupply currently of 807,000, which is cumulatively built up year on year, to the point where when we get to 2029, that deficit will have gone up to, you know, 998,000, just under 1 million homes for what is required. I mean, these are quite staggering numbers, and these are reasons why we see strong long-term fundamentals, not only now, but over the next 5, 10, 15 years plus in the London property economy. Okay, so I mentioned that it's only recently that really the recovery has started to happen in London. So when we look at London, of course, like most cities, we've seen it ebb and flow in terms of the property market. You know, we've gone through pandemic, Brexit, financial crises, etc. But where we see the market now, both prime London and central London, we see the market starting to uptick. You know, in the year to 2020, we've seen a bit of growth, 3.5% and 3% respectively in prime London and central London. And in the period to September 21, growth of 0.9 and 0.5% in London and central London respectively. In fact, October, we started to see further growth. And as I say, that's why we're so optimistic for 2022. And as Knight Frank said, the property market is basically resuming an overdue recovery as the UK starts to open up, as London starts to open up, as people start to return to London, and a lot of pent up demand, in our view, is about to be released. So let's go into the next slide. So when we look at the rental market, I mean, what we've basically seen across the UK this year is a very strong rental market. I mean, regionally, we've seen rents at a 13-year high. You know, we know that because we manage 5,000 plus properties in the UK. So the predictions in our cash flow from a year ago for projects coming up to completion have been revised upwards. And it's quite incredible when you look at sort of stock levels across the UK. So from a rental perspective, and in terms of what property is available perspective, you're talking about over a 5-year period, the average amount of property available on the market is about 40% below what is typically expected. A lot of that has built up, for example, since 2016, when a lot of landlords came out of the market, when there were tax changes at that point. But you're in an undersupplied market, as I say, with lots of pent-up demand being released. And one of the stats I read just today was quite amazing. I think the 1 in 16 properties in the UK has been transacted on this year. I mean, it's staggering amounts of activity in the market. So very, very strong market indeed. So regionally has been strong. And as I say, it's only in the last sort of quarter or so, since the end of Q3, that we've started to really see London picking up. As I say, post the July the 19th opening up in the UK, to the point where we've seen 50% above average tenancies sort of bouncing back in that period. So lots of pent up demand being released and starting to see rental increases for the first time in the London market, which certainly we haven't seen for quite some time now. So the rental side is definitely starting to turn the corner alongside the actual sort of capital upside that we see into the whole of London. So let's go into the next slide. So in terms of, we're going to flick over to Birmingham now. So Birmingham, for those of you who are not familiar, and I know that most people will be familiar with Birmingham, but Birmingham is smack bang in the centre of the UK. That's always been part of its appeal, that geographically it's in a superb spot to get every which way across the UK, from London to Sheffield to Edinburgh to Manchester to Heathrow to Gatwick airports. And of course, when HS2 is built, of course that will dramatically reduce those journey times by train across the UK. Indeed, the first leg, HS2 into London from Birmingham, will be sort of 45 minutes. So actually it makes it commutable, which is quite incredible. And as one of the key stats says there, 90% of the population in the UK is reachable from Birmingham under 4 hours. So that makes it very, very attractive for businesses who have offices in Birmingham to link up to their regional offices and capital city offices in London.
I must say, going back to your point earlier on about you having not been to Birmingham for a long time and going 18 months ago, from what I hear, it's gentrification is going millions and billions being spent in that part of the world. And obviously, when you're commutable at 45 minutes, you're probably talking about a cost of living of maybe 50% of what it would be in London, would you say? Yeah. And that's what's driving it. It's a beautiful city. There's so much going on there. We've got the Commonwealth Games coming up there soon. Yeah. So yeah, I agree with you. It's phenomenal. And going back to my time when I was in England, and the thing about Birmingham, I remember, is you just drive through it or over it. Yeah. You didn't stop at it, but now it's actually a destination with so much going on there. So yeah.
Yeah, you're right, Chris. I mean, it's not only just big corporates that are moving out of London, which is great, and that's driving salaries up and better affordability and so on. But as you say, things like the Commonwealth Games is going to transform the city in 2022. Then you've got, the Michelin star restaurants. There's more Michelin star restaurants than anywhere else in the UK apart from London. And the whole city's having a huge makeover and making it incredibly livable, which with respect, it wouldn't have attracted people like it is doing now 5 or 10 years ago. It is completely being transformed. So you're absolutely right there. So let's move on to the next slide. So again, we're sold on the fundamentals of Birmingham. I mean, you know, again, I was reading a report today. If you look at the amount of regeneration hotspots across the city, you have Paradise, you've got Snow Hill, which is almost like the Canary Wharf equivalent in Birmingham. You have the Smithfield regeneration area, you've got Digbeth, you've got Langley, you've got science parks. You know, all these areas are driving lots of jobs, lots of wealth creation. You've also got lots of digital startups, sort of tech startups coming into Birmingham. And as I say, this is having a very strong positive impact on population. And again, yeah, if we look at, you know, why do we invest in cities? One of the key sides alongside undersupply is population growth. And we see healthy population growth over the next number of years, but also the right type of people. So when I say that, I mean young population, you know, hungry, keen to get on, keen to work hard, keen to create wealth. And 40% of the population of Birmingham actually are under 25, which makes it one of the most youthful cities in Europe. And that really does bode well for the long term in Birmingham.
I think I read that a lot of these young people say they go to university in Birmingham. There's a lot of universities in Birmingham and the surround, and they like the city so much they stay, get a job there, bring a family up, etc. Whereas before, historically, people would go to university in places like Birmingham, Manchester, and then go back to where they came from. So that probably is why. It's an incredible stat, isn't it? 40% are under 25.
Yeah,
incredible stat.
Yeah, it's true. I mean, as you say, the retention rates are really strong. People would normally have, in the past, head out of regional cities, primarily to London or elsewhere, but that's not the case now. The populations are a lot stickier of young people, and as I say, that stat demonstrates that. And a lot of the courses are conducive to the types of industries in that city. So in other words, someone can graduate in Birmingham, and there is a career path for them in Birmingham as well. Which is key. So let's move on to the next slide. So as I say, the final part of the jigsaw, again, where we've talked about sort of population growth, regeneration, is supply. And again, we see strong supply constraints in Birmingham. So by the end of 2031, so in 9 years' time, this deficit that we see year on year, due to, as I say, planning, rules and regulations being extremely slow. And as I say, that's definitely the case even further during the COVID. A shortfall of just under 30,000 units by 2031. So as I say, we see, you know, salaries going up, jobs moving out of London, better paid salaries, population growing, undersupply. And the fact of, I'll put up three key stats there. First of all, we've seen property prices move upwards in early stages, and we see good growth over the next few years. But affordability is very, very key. So if you look across the UK, they talk about it being about 7 times average salary to buy a property. We're talking about in Birmingham, it's closer to 6 times average salary. But of course, there's catch-up being played there. And as I say, when I come on to the next slide, you'll see the sort of jobs that are being created in Birmingham. And as I say, with decent salaries as well. So there's good affordability. And finally, on average, you know, property price is 72% more affordable than London. And again, if you go back to my earlier slide where I mentioned it's going to be 45 minutes into London on HS2, you know, therefore you could effectively be on a London salary commuting into London from Birmingham, and the fact that, you know, the proximity to the capital, with people on good salaries here, but property prices considerably cheaper. You know, all the fundamentals indicate that we're going to see good, strong, exciting growth in Birmingham over the next 5 to 10 years. And the other point I'd mention is, you know, Manchester sort of gentrified a lot earlier than Birmingham for whatever reason. prices have gone up considerable in Manchester. You can look at city centre, 500, 550 a square foot. You look at Birmingham, it's close to 400, 450, but it's got the same fundamentals of Manchester, but it's closer to London and it's a bigger city. And therefore, clearly we can see the same sort of effect in Birmingham happening as it did in Manchester a few years back. So we'll move on. We'll move on to the next slide. So these are some of the corporates that we're seeing increasing headcount into Birmingham. So HSBC, Deutsche Bank, and you look at Goldman Sachs there. You'd never have thought Goldman Sachs would be in Birmingham. You'd have put a pound to a penny that would never be the case. But Goldman Sachs are now in Birmingham. You've also got the big auditors, PwC, KPMG, who have been increasing headcount there. Jaguar, Land Rover, Rolls-Royce, and Communications BT. These are just some of the companies that are increasing headcount, putting new headcount into Birmingham. And then there are a whole host of startup businesses that are into Birmingham as well. So we'll move on to the next slide. I've just lost you for a minute, Chris. So let me just see if I can get you back. I can't quite see you. Okay, you're back. That's great. Okay, lovely. I was missing your smiling face.
Oh, well, now we've got that. I like a map.
So, right, I'm just going to now drill into the projects. So let's start off with Solarium. So some of you may remember we did a first launch in Solarium. This is the second launch, second phase. So why we've focused in this part of London is you've got basically a huge £26 billion master plan, the Great West Corridor, as they call it, transforming 3 boroughs. And it's seen as the biggest regen effectively across London since the London Olympics in 2012. And we all know what that investment done all those years ago to East London and Stratford and so on. And we see that similarly happening on the west side. So the exciting thing really is Brentford has typically been somewhere that's been underinvested, but it's in a catchment area of some really good neighbourhoods. And with all this investment, it really is going to transform Brentford. And this is a type of area that we've invested in over the years, an area that's not the finished article, it's not too early, it's not too late, but a value spot where we see people can make money over a number of years by investing now. And one of the stats I was looking at today was when we look at affordability in London. So on average, it's sort of 12 times average salary to buy a property. In Hammersmith and Fulham, which is quite close by, it's 15.8 times average salary. If we look at Hounslow, London Borough of Hounslow, which is Brentford, it's about 11.4. So it's below the London average and it's below neighbouring boroughs, which makes it very attractive for people to move into, to buy and rent, of course, as well. And somewhere where we see prices looking to increase. In this immediate vicinity, there's a lot of industry. As it mentions there, you've got the Golden Mile. There's 200 multinational corporate offices. A lot of those are positioned there because you just go west and within sort of 20 to 30 minutes, you're into Heathrow. You've got the likes of Sagar, you've got GlaxoSmithKline, and a whole host of other corporates on the doorstep. And then literally you're 30 minutes into London. But the other point just to make is, just to explain that graph on the bottom right-hand corner, the key message to take out of that is only 40% currently of the required stock for the growing population has been built in this area. So again, it's extremely undersupplied location.
The Premier Division football team now.
Yes, correct. Yes, they had a good start.
It's on the map. Yeah.
They've kind of wavered a little bit, but again, the serious point is the fact that they're in the Premiership really does put Brentford in the spotlight. And actually the new stadium and all the regeneration associated to it, Chris, is all part of this sort of master plan investment in the location. that, as I say, over the next 5 to 10 years will really transform this location. So we'll move on to the next slide. So here's the project. So as I say, some of you will be familiar with this. We had our first phase launch, which went very well. We've now taken a number of other units. So literally, we are just launching this at this point. So we have all the best units available. We have all the units that are overlooking the park and the lake. The project is completed, so there's no developer risk at all. Actually, a number of the units are tenanted already, so there's no risk from a rental perspective. And it really is a super location with a developer we've worked with 3 times before. So we know it's a good quality established developer. As it indicates there, you've got basically good transport links nearby. So in terms of getting into Paddington and Waterloo and Heathrow Airport, Kew Bridge Station is 7 minutes walk away. The point I'd make there is in Kew, the average price of a property, of a house in Kew is £998,000. We're talking about 372 to 523. So when I mentioned about a value spot, it really is a value spot. It really is an area where property is considerably cheaper and where absolutely people would want to move to because it's at the doorstep of Kew, Richmond. You can walk into Chiswick from here. I mean, when I lived in London many years ago, I lived in Ealing nearby, and that's just sort of very close to here. And these are areas where young people, young professionals with all the parks and trendy bars and restaurants absolutely want to live. And Brentford has just opened another door there for people to be able to afford to rent and buy.
Somebody just sent me a message and said, for 372, what do you get? Is that a studio, 1 bed?
So that will be a studio, Chris, and going up to 523 will be a 2-bedroom unit. So, and as I say, the units that we have, we've got cheaper units on the other side of that building, and we've got the units that overlook that park. And you can walk through that park and you can get to a couple of the stations to then go into London. So it's an attractive journey in the morning to get on the train and hop into London.
Another question has come in, Grant, sorry to cut across you.
Sure.
Mortgages. I know that this is the second phase, as you said earlier on. And so on the first phase, mortgages, no problem, 65%?
Yeah, 65%. I think we can actually get up to 70% as well. We can do repayment mortgages and interest-only mortgages. So, you know, some clients prefer interest-only from a cash flow perspective. Others prefer repayment. So there's the 2 options there. And as I say, you know, there is a strong demand for completed stock. I mean, as you know, there's a strong demand for stock itself. You know, there's less stock in the market. We all know that when I speak to various colleagues in different companies, etc. as well. So this is great for clients who want to get their capital in quickly, get it working for them, get a yield with no developer risk.
And I must add at this point, we have an excellent mortgage team at Holborn. So if people are unsure, they want pre-approval, then you know, please get approaches and we can sort you out. Because I think that's important as well. People want to know that their mortgage is going to be approved. Sorry, just a little one that just came in from one of our watchers, viewers.
Very good point. No, that's a very good point, Chris. To get the mortgaging done, get that confirmed at the outset, so you've got that peace of mind. As I say, before you go ahead and purchase, that absolutely makes sense. So let's move on to the next slide. So I just thought I'd share a couple of photos because it really does have good facilities here. And very much sort of a community spirit can be evolved. So you've got meeting room, you've got a residence gym, you've got roof terrace, sort of in the picture there, on the bottom left. You've got a games room, table tennis, etc., residence lounge, even a cinema room. So really nice sort of facilities there. You know, if people are working from home a couple of days a week, it's perfect from that perspective. And as I say, it's perfect from the point of view of getting into London and all the various employment hubs there. So very nice building, very attractive building. And as I say, it has lots of different on-site amenities there and facilities. Okay, so I'm going to pause there because I'm just going to now flick across to, what do we have in Birmingham? So I will just cover the two Birmingham projects that we have, the silversmiths in the Jewellery Quarter and the units we have for Eastern Green in Birmingham. So silversmiths, so Jewellery Quarter on the north side of Birmingham. So this is an area where there's 200 odd listed buildings. It's all low rise, it's all old style building, lots of character, bars, restaurants, very trendy. People want to live in this type of location in Birmingham. This is an established developer we've worked with again. We've had one previous project with them. I had 5 clients in there. It's completed, really high quality, which is why we've gone again with the developer. Got good transport links. You've got St Paul's, which then feeds you into Snow Hill, where, as I mentioned earlier, lots of big corporates. Universities aren't too far away, and as I say, city centre access is very, very good. So that's on the north side of the city, and then on the other side, more on the sort of, I suppose, south side, you've got Eastern Green. So Eastern Green is in Digbeth. Digbeth, I would almost relate it to, if you go back 10, 12 years, to Hoxton, Shoreditch in London. And when we did it at that time, people said, well, why would you invest there? And Hoxton and Shoreditch, as we all know, is very trendy, bars, restaurants, and property prices have gone up significantly. And it's exactly why we're doing it here. The big sort of driver is there's going to be a metro link that goes into HS2. So a tremendous amount of regen nearby. You've got the custard factory, which is media, tech, lots of new industry popping up. And you can walk into the city centre in 10 or 15 minutes.
Ron, I'm going to ask you a question. So obviously we do a lot of webinars at Holborn, and Eastern Green has done fantastically well, you know that, with Holborn. People always mention the custard factory, and nobody's ever said what the custard factory does. Does it just make custard, or is there another reason why it's mentioned?
I think it was an old custard factory.
Well, I imagine that, yeah.
I'll double check that. But the fact is, there's lots of sort of media type companies. There's 101 companies in there, as I understand. Right. So media, tech, all part of this sort of trendy, startups type side, which Birmingham is extremely strong for now. And lots of little businesses are feeding off of that. And it's interesting because I've got a client who grew up in this area, and actually he was sort of saying about what it was like years ago. And he's actually just bought a property for his son here because he says, it's incredible how it's transforming and changing and evolving. And, I just see it, I just sort of so proud of somewhere an area that I grew up in, which is, being completely transformed. So, when you've got faith of local people there, that's very, very powerful.
Yeah, I know. Do you know what? Sometimes, Grant, it should all be about the figures. It should all be about supply and demand. But sometimes emotion takes hold, and you can see why somebody would go for that. Yeah, absolutely right. Absolutely right. When you've got that personal sense and you've grown up there, I agree. So we'll flick on to the next slide. So I think we're going to go into just a bit more detail on the two Birmingham projects now. So in these two, as I say, so Eastern Green's a shiny new build. It completes in Q1 of 2023. Building's well underway now. Everything's in place, financing, etc. The point I'd make here is we've sold most units. We just have a few units left now. But the key thing is we launched this at £380 a square foot, and we recently had an appraisal done. And the average price per square foot is £400. So in other words, if you're buying those remaining units, there's already embedded value in those particular units, which is, of course, a great reason to invest. As I say, it's very close to the metro station, so the transport links will be excellent. Pricing, as I say, on this project is from 199. And we can get up to 70% mortgaging. So subject to status. Subject to status. We always say that.
Yes. Yeah.
But you know what? Do you know what? Why I say that? And you know, speaking to people, you know, the fact is completion date beginning of next year means it's, as you say, it's well underway. And that is a really, really good feeling for people, because with what's going on, COVID, etc., I think there's maybe a flat piece of land now, and got a 3-year build period or 2-year build period. The fact that that's got a year to go means, I imagine, is it up to the top yet? Is it shell done and they're just doing the or is it halfway up?
Yeah, it's more on the earlier stages, but all the foundations are done, and it's doing that actual next update to the clients quite soon. But it's a relatively small building from a sort of a risk perspective. It's not hundreds of units, so you know, bigger potential for delays are just not there.
And ground floor, are they going to be commercial, or are they going to be you know, for rent, residential?
Residential units, Chris. Yeah.
Right.
Yeah.
Okay.
Yeah.
That's good.
But to your earlier point, as I say, I do think, you know, having the mortgage conversation as well at outset does make sense. Get that confidence, get that peace of mind that, you know, before you exchange contracts, you know, you're going to have your mortgage in there, which is key. So we'll move on to the next slide. Here's just a few sort of CGIs, nice quality in terms of the bathroom and the lounge, living room. That's just sort of on the top left is the sort of interior there. There's an outdoor sort of the green area, there's internal car parking. But as I say, the transport really is A1 with the metro station right next to the building. So I don't necessarily see the reason for the car parking to be taken up.
It's a question that gets asked a lot, Grant.
It does.
Yeah.
I think it does depend on.
In London, hardly anybody has any car park space. And then you're paying 20,000 for a car park space. And people ask me, and probably ask you the same question: should I? Shouldn't I? And I oftentimes say, honestly, the public transport system is good enough, and you know, if they need a car, they can get on a train.
Yeah, perfect. And the other thing I'd add, Chris, I mean, you know, when I was growing up, the first thing I wanted to do at 17 was drive a car. But I think that's different now. I think younger folk, they're not so focused on getting a car. They don't see it as such a priority necessarily. Of course, it's
I didn't know there were cars that far back, Grant.
Believe it or not, there was, Chris.
I'm older
I thought
than
we
you.
was of the same generation.
I think I'm older. Ford Escort. Anyway, sorry.
Oh, you were lucky. I had a Mark III Cortina, I think, when I started.
Oh, what a car! What a car!
So anyway, let's. So we'll move on. So Jewellery Quarter. So as I mentioned, really lovely area. 200 listed buildings in this location. You know, you've got that sort of great ornate sort of clock there just on the periphery. 40% of the UK jewellery is still produced here. As I mentioned at the outset, people in Birmingham want to live in this location. In our first project with this developer, NBSM, Bishton Fletcher, we had a couple of buyers from Birmingham who moved into this project because of the superb location. As I say, it's basically got very strict planning regulations. You can't build high rise, and it's all this old sort of brickwork, which has a lot of character. So we'll move into the actual project. So this is the project. So it dates back to 1865, during the reign of Queen Victoria. During the First World War, it was an armaments factory. It's got a lot of history. It's in an area where absolutely it appealed to young professionals. It's a small project, 1 and 2, 3-bedroom units. For this developer, it really is a labour of love. It's a local developer, NBSM, really high quality developer. As I say, they finished the first building to a really high quality. I know that because of the positive feedback from the clients I had, and that's important to me, that I'm talking about a product that is a good product. And this is genuinely a very good, diligent, caring, quality developer. So this is slightly different to Eastern Green in that it's a slightly longer lead-in. It's a 2-year till completion, versus obviously Solarium, which is completing now. So you've actually got a whole mix there. in terms of for your clients. You know, some clients just want to lock in the pricing now, which is good for Eastern Green and this one. Other clients want to get their capital in quickly, which is the solarium. So we have the whole mix there. And on the next slide, I'm just going to show you some of the interior. So it's as I say, it's really, really nice. So you have this open brickwork. You've got these big windows. There's plenty of light. All the fixtures and fittings are absolutely at the very highest quality. As I say, there's 1, 2, and 3 bedroom units there. They've all sort of individual style and character. You've got these lovely wooden floors and sort of ornate sort of bathrooms there. So very, very high spec units, and as I say, a really good quality developer. So we'll move on to the bit. Well, actually, we'll stop there for 1 second. We'll move on to that slide. So hold your questions if there's other questions. I just want to give a quick roundup for what else we have at the moment. So just briefly, we've got High Wycombe, we've got Birch House. So this project is effectively commuter belt London. Again, it's a completed project. You can get into London within sort of 35 odd minutes. 1 bedrooms from sort of £220,000. You've also got Heathrow Airport on the doorstep. Obviously, that's a big employment hub. So that one is completed. Kenham Ridge that we were discussing earlier, Chris. So this is the project that will complete in, I think it's March 23. Sheffield is on the HS2. We're actually looking at another Sheffield deal as well. It's certainly a strong area of growth. It was the old steel industry, sort of fell into decline. Now you've got a whole host of sort of corporates up there now, from Tata Motors to HSBC to Boeing have got big office up there. And certainly a city on the up, and a big university scene as well. So we have Kenham Ridge in Sheffield, and then finally, just sort of flicking over, we've got something in Portugal, in the Algarve. And in terms of if I go on to the final slide, we have Leipzig in Germany. So Germany, we've done 2 projects in Leipzig. The third one is with a developer we've worked with before, who built to a very high standard. Again, very good quality developer. Leipzig is the fastest growing city in Germany by population. More listed buildings than any other city in Germany.
Grant, is that a picture of it?
That's actually a building in
Leipzig.
In Leipzig, yeah.
Right,
so
okay.
But you know, there's about 1,400 listed buildings in Leipzig. It's quite incredible. Very attractive city. They've got an amazing sort of 20-year high-level plan. So again, that's
I guess from an investor's point of view, anybody that's hedging currencies, Brexit, etc., then you know, Germany is, I think, IPG, you must have done 19 different projects in Germany, so you're well versed in Berlin. When it comes to mortgages, keep talking about mortgages, I know, and that sort of thing, the legal framework, it works. Yeah. Yeah,
as you say, Chris, currency diversification is almost as important as property diversification. So having GBP exposure, having Euro exposure in a hard asset, yeah, absolutely makes sense. And that's why, hopefully, if clients invest once, we can then take them on a journey to other property investments as well. So that's about it from my side. Chris, I don't know if there's other questions that have come in, or if there's other questions.
Questions just come in, which is a little bit left field, Grant, a little bit left field. But somebody wants to invest, and in particular, they're interested in silversmiths. They've got a property in the UK at the moment, which they had rented out, and they've owned it for 8 years. I'm just looking at my phone whilst I do this, with a small mortgage on it. Can we help them when it comes to remortgaging? How does that work? I'm not a mortgage expert.
Yeah, so I mean, they can use a mortgage broker. Of course, you've got mortgage brokers there.
Got Darren, yeah.
Yeah, so in effect, you know, depending on if they've got a fair amount of equity in their property, if it's a relatively low loan to value, then basically they could refinance that property to provide capital for deposits for a new purchase at somewhere like Silversmith. So that's definitely feasible to do, Chris.
And the other thing that came up, somebody mentioned about offshore companies, and we can help that with that at Holborn. So please get in touch with your wealth manager. Clients, thanks very much for joining, but get in touch with your wealth manager, or obviously contact me or Grant at IPG. But yeah, no, I mean, I don't know how many projects that was in total. It's probably about 8, and I think you've covered from 100 and odd up to 500,000.
Yes,
In various parts of the country, which is fabulous. I do, you know, I like Silversmith. I've always liked Silversmith. I like that area. I think it looks really, really smart. But of course, I'm from Hounslow, which is a stone's throw from Brentford. So an area where I nearly bought a 1-bedroom flat when Mrs. Thatcher sold the council houses for 65,000 in Brentford, and I decided not to go ahead. So there we are, and I'm only 32. So thank you very much. Thanks to Alex for hosting. Thank you, everybody. Oh, somebody's come up with a question. I hope so. Hang on. Wait. Yeah, expats. Yes, mortgages. Yeah, we've answered that one. So that's great. Grant, thanks very much indeed. That has been recorded. It will go out on the BBC, ITV, and Facebook. So if you need anything else from either of us and from anybody, please get hold of your wealth manager. Please get hold of somebody from Holborn. And thank you very much for the nice comments. Thank you. Grant,
Chris,
always a pleasure, never a chore. We'll do the first, beginning next year, we'll do another one.
Let's do it, Chris. It's great to work with you, and I wish you a happy Christmas, and I hope you have a good break over the Christmas period, Chris.
Yes, I'm actually stopping work on December the 24th at lunchtime, back the day after Boxing Day, and I've been given New Year's Day off. So thanks very much for that. Welcome. Thank you. Merry Christmas to everybody out there, and thanks for joining. And Alex, once again, thanks for holding all the pieces of string. Thanks, everybody. Bye,
Cheers,
Grant.
Chris. Thank you.
Cheers, man.
Cheers.
Cheers.
Bye-bye. Bye. Bye.